Hey everybody, SOFI has been on a wild ride post earnings. And last week I opened a $16 call option expiring March 21 and waiting to see if I could open a $15 cash secured put if the stock went in the other direction, which happened. In the last video, I had also mentioned I would put a 20% stop loss on the call options, but I ended up closing the call option with a 60% loss. What happened? DeepSeek happened. DeepSeek was launched over the weekend, and on Monday, the stock market was completely red. It took the US by storm, as well as it pulled Nvidia down 16 plus percent along with other tech stocks. Even though SoFi's earnings was decent, they reported decent guidance, the stock just failed to gain momentum post earnings. In this video, I'll break down why I closed the calls and why I opened a cash secured put and what is next for this trade. We'll also touch upon a little bit on the earnings and the technical analysis for SoFi. So if you enjoyed today's video, make sure to give us a like and share with your friends and family. And without further ado, let's dive in. Last week, I was very bullish on SoFi because of the strong price momentum prior to the earnings. We ran all the way from about 1475 to 1830, and it showed a lot of strength with volume also popping up throughout pre-earnings. So the plan was simple. I opened a $16 cash secured put expiration March 21. If the stock continued its momentum further up, our calls will print. And if the stock reversed course, I would close the calls at a 20% loss and open a $15 cash secured put expiration March 21. Before market opened, the stock dipped all the way to 1544, but as soon as the market opened, we saw some strength coming back into SoFi, and SoFi started trading around the 1629, and throughout the day we were bouncing on and off from this 1596 level, and we ended up closing the day around 1610. Throughout the day I was monitoring my position, and because the stock kept going above $16, I had hope that we would see some strong momentum coming in throughout the day, or maybe moving on to Tuesday, which is today at the time of this recording. However, on Tuesday we saw a breakdown in the price. The stock dipped below 1596 and currently is trading around the 1567 mark, and there isn't much volume there, and that is another cause of concern. The RSI is around the 47 mark, which is neither oversold nor overbought territory. So yes, there is room to run on either side, but this clear break in momentum of the stock price, even though we have created this gap here, my call options went into red, and before the market opened I had removed my 20% stop loss limit. The reason was because it would have triggered a stop limit right as soon as the market opened. So I wanted to give little bit time throughout the day, because sometimes the stocks do recover at that point in time. However, yesterday was unlike any other day because we had another major market news about DeepSeek, and it just pulled the Nasdaq down 3%, it pulled Nvidia down almost 17%, and along with so many other stocks. And I felt that even though SoFi's earnings were not particularly bad, they did not hit the ball out of the park, but it was a decent earnings, and overall the trajectory remains very positive for SoFi. That was another reason why the call options just could not recover at that point in time, but we did open a cash secured put. If you're watching this video for the first time, you might not be able to connect what am I talking about. Go check out my last video on SoFi. Last week prior to earnings we went into this trade. But coming back over here, this particular call option, which was a $16 call option expiration 21, on today, which is the 28th January at the time of the recording, it's supposed to be down around the 50-60% mark. So at the time of this recording, I have closed my $16 call options. We incurred a loss of about 59.44%. If I would have gotten out at 20%, I would have kept about 80% of my value, but I did give up a little bit more, hoping that the stock would recover. And at the same time, we did open a $15 put for March 21, and we gained about 98 cents per share, and we opened 10 contracts, so we got about $983. Now with the 983 in positive and losing about 363, we still gained about $619 on this trade. Now the whole idea is, if the stock stays above $15 come March 21, this option will expire worthless. If it drops below $15, I have two options. One is I can let it expire and own 10 contracts of SoFi on 21st March, or I can roll this out for a couple more months out and collect more premium and continue to drop my cost basis. So at this point in time, my cost basis for SoFi, if assigned, would be about $14.02. I will post the next update on this particular trade once I take an action or once something major happens on the stock price. So what is next for SOFI? Well, this is going to be a very interesting time for SOFI. Well, we do have a gap here after the stock dipped below, and this provides an opportunity for the stock to rebound. But what we would want to track is this level of 1545 all the way going to 1593. This is where the majority of the trading is going to happen based on the current volume bar. We do have some support coming out at 1525, and that is what we want to see, that if we should be able to see a bounce from this level and eventually see a reversal in the stock momentum. If it falls below, we would see a downtrend going all the way to about 1337, which will be around this level as well, 1337, 1343. But more to come on that. We'll see how the market performs. Key takeaways and lessons learned. Number one, respect your stop loss. I had breached my own rule of not respecting the 20%, which basically led me to a stop loss of additional 40%. This was absolutely a mistake, even though I showed you why I did what I did. Second, other events will have an impact on your trade, which are sometimes beyond your control. Now, in this scenario, we had a completely non-related event happening which dragged the market down, which also affected this particular trade. And thirdly, you should always hedge your risk. In this scenario, I hedged my risk by opening a cash secured put, but it only works when you do it at the right time. So here's a recap. Let me know in the comments, how do you manage trades like these? And if you found any value from today's video, make sure to give us a like, click on subscribe, and ring the bell notification. I will see you next time, investor family. Happy investing.